TD Cowen initiating coverage of the U.S. auto sectors today, issuing buy ratings for General Motors and Tesla in particular. For more, let's welcome in Itai Michaeli, TD Cowen equity analyst. Thank you so much for being here. I thought your note was really interesting because you obviously looked at these companies specifically, but you also have this sort of overarching narrative. And one of the things that you say that you are looking for in your top picks right now is sort of defensive characteristics. So I guess I would ask, first of all, why? And what would you say are defensive characteristics right now?
Absolutely. Thanks for having me on. So, defensive franchises to us in auto are the rare few markets where many of the headwinds that we read about and look at in the automotive industry really don't apply to as meaningfully or even at all. One of the strongest end markets we think globally in automotive is the North America pickup truck market. We think it's a majority of GM's earnings and Ford's as well. And so these are markets that where, if you look at the multiples on these stocks that have been pricing in peak auto and peak margins for quite some time, these are markets that can still grow, they can flourish, and they also provide a base for these companies to then be able to invest in future growth in EV, AV, and software, while having these strong core franchises there in place. So it still is, just given all the complexity in global auto, new competition, many headwinds, we look for those few rare markets where we can still see healthy growth, healthy margins, and ultimately drive multiple expansion on earnings beats.
On Tesla, I want to get your take on this because we've had some analysts who cover that name, and part of the argument they've made, including some analysts this week on this show, is about Elon Musk and that he has become a problem. Too political, too much of a lightning rod, and their suggestion is he is in fact negatively impacting Tesla's fundamentals. What's your response to that?
Look, there's always going to be a list of bull and bear cases and upside and concerns with this stock. It's always going to be very highly debated. And there are some legitimate brand concerns right now, sales, market share pressure, competition. But ultimately, we always like to look at these stories from what's happening on the product side. And Tesla, is about to launch a significant new product. They're already launching the refreshed Model Y as we speak. And so typically when you have sentiment as poor as it is now, the stock down about 50% from the highs. We all know Q1 is expected to be a tough quarter. That's typically ahead of product catalyst, the time to actually take the other side of the view. Because there's still a lot of expansion in EV demand around the country and globally. We even think that Tesla has an opportunity to regain some share in some of the top EV counties where the company has lost some market share. And certainly as they make progress on full self-driving, whether that's eyes on or eyes off, of course, any incremental feature of value add can also accrue to the company's market share and brand perception. So there are some near-term challenges. We don't dispute that at all. But ultimately, I think particularly once we get through Q1, there are significant and potentially consequential catalysts for the story over the next 12 to 24 months we want to be there for in the stock.
What's the potential, though, that even with new product, buyers won't show up?
Look, there's always a risk, right? Obviously, you want to make sure the products are attractive, well-priced, well-designed. You want to look at the design language of those
but
vehicles.
Does some of it have nothing to do with the actual product, I guess is what I'm asking. If there is this sentiment issue that clearly is an issue with the existing product that's out there, I guess how much do you think that will be a problem even for the new product that has nothing to do with the product itself, no matter how good it is?
Sure. There are still many parts of the country, it's a good question, where EV demand is low, where Tesla's brand can still grow on existing and particularly new products. So ultimately, our call is that new product is going to be still the main driver going forward here, because there are many parts of the country where EV demand is still low, Tesla's share is still low, that can be unlocked over time. One important point to make is when we think about EV demand in the US is because we have a starting point of 2 vehicles per household, you could have this sort of theoretical upside scenario where more and more people kind of wake up and decide to have the best of both worlds, so to speak, in having one electric vehicle and one internal combustion vehicle. If that were to start to happen in succession in the US, EV demand can balloon and inflect to much greater highs than commonly expected. And of course, companies with capacity, product, and technology could lead the way. It's going to happen overnight. We don't think so, but certainly if you have product and you can unlock new markets, as we think Tesla has an opportunity to do with the next round of product, that does make for a more promising setup, particularly with sentiment where it is today.
Itai, thank you so much for your time and those picks. I appreciate it.